Hey friends, welcome to your Friday Financial Flashlight, your weekly check-in to pause, zoom out, and lead in with your business like a visionary CFO you were born to be. This isn't about spreadsheets for the sake of spreadsheets. This is about clarity, control, and choosing to lead instead of react. We're here to walk you through 5 core metrics that you can review every Friday that will keep your real estate business and your personal financial ecosystem aligned, funded, and ready for whatever comes next. This is your moment to slow down, look at what matters, and run your business with intention, whether you're in the dirt, in design, or just dreaming up your next big move. These 5 numbers will keep you grounded and growing. So take a deep breath, open up your numbers, and let's go. Cheryl, walk us through it.
Great. Okay. So let's get into your CFO scorecard. 5 metrics, and you're going to get lots of reps every Friday. So the first one is your cash flow forecast. And this is really a 13-week rolling view. So it's not just what's in the bank today. It's what you know is coming in, what you know is going out, and when over the next 13 weeks. So let's look at things like your income, your expenses, any loan draws, any payables you'll have. Think about those expenses and outflows that occur only occasionally. Perhaps you have an insurance payment or a property tax payment that you only pay twice a year. Not just those things occurring regularly, because then you'll be able to catch any gaps. So the way to make sure that you're catching everything is I would look at your bank statements or your P&L from the last 13 weeks and see what you can gather that's recurring that you can put in there. But also look at the same time period from last year, because that's going to help you catch those sort of occasional payments, things that are going on. So you're going to look at, are you in the green? Or do you see a lot of red at the bottom when you look at your ending cash flow? If you see you have a gap, what can you do? What steps can you take now to adjust? Can you renegotiate payment terms? Can you make sure that you have a line of credit that is available to cover a short-term gap? Because really what you don't want is to end up in the red. That's why you're doing this 13-week view. So if your red flags that you're looking for, unexpected outflows, things that don't match your project schedule that you're working on, and your goal of this piece, of this metric, is to make sure that you have enough cash in your runway to breathe and to be able to adjust before it's too late.
I love that. And a couple things, guys, as you're looking at that 3-week rolling, and hopefully you have it up in front of you. As Cheryl was saying, is sometimes there are going to be those unexpected times where you have property taxes or they hit and your monthly budget isn't the same average. That's the best part about looking at this 3-week rolling, is because you're going to naturally have those ups and downs in your business, and that's okay. What we want to do is start to be able to forecast those, plan those, and so you're not reactive and stressing on it. So you're still looking at your numbers from a mindset of abundance. So take a little bit of time now. If you have to pause this video, go ahead and pause the video. Look at those 13-week rolling. Think of the questions Cheryl just put out there for you to look at. If you need to rewind it. Think and sit in those numbers. Make a list of all those things that she's asking you and what you're seeing, so that next Friday you can take action on them and keep tweaking and moving forward. All right, Cheryl. So what's the second one we're going to be looking at?
Okay, so your second one is your projected versus your actual cost. You're going to look at that both by project and overall. And, we're not here to be judgmental. We're not here to beat ourselves up. We're just here to look at the data so that we can understand how we're going to move forward. So each week, just pull one project, right? Like, you don't need to look at everything every week. If you pull one project each week, and then every few weeks, you'll be able to cycle through each active project, right? So that everything is looked at least once a month or every 6 weeks. So you're going to start with that one project. You're going to look at, what did you budget for this phase of the project versus what did you actually spend? Where did your spending drift from that expectation or that budget, and why? What can you learn from that the next time you create a budget or in ways that you might need to modify the budget for this project going forward. Any red flags would be things like a lot of miscellaneous costs, right? Like if everything's being dumped into miscellaneous, like there's something going on there. You should be able to categorize, particularly within a project, most of your costs. Any change orders that you have that aren't really backed by that specific change in scope that you are directing, right? Or just really even just scope creep in general. So make sure that you're keeping your mind on the outcome that you're looking for, and things like not putting in super expensive fixtures if the environment doesn't call for that. Make sure that you're keeping your end goal in mind as you're going through that project. So the goal for this is real-time alignment between your plan and your execution.
Yeah. And sure, I love when you talk about the miscellaneous bucket, because a lot of times we get that put in there. And if you're really starting to cost save, guys, when you're looking at these numbers for your project, a lot of the big construction companies look at one project a week. Like Cheryl was saying, just one a week. Don't overwhelm yourself. You'll get to all of them really soon. Also, I would really encourage you to keep a OneNote or some kind of document that anything that's a surprise in your numbers, enhance your project and process. Put that on the list, enhance your due diligence process. Like, don't beat yourself up, as Cheryl said. We are here to be honest and improve. And that's why we're looking at it. It's progress over perfection. All right. So I just wanted to add that tip, because that's what I do when I go over those numbers with a project, is constantly improve my process. Should I ask a better question in due diligence? Is this something we need to have in our scope review? All those different things. Fix your expenses. If you've heard any of our other podcasts, like you probably heard the $6,000 exit light. Like, make sure you're looking at all those expenses intentionally, right? And again, if you need to pause this, take a second to look through those projected and actual costs, do so. Come back to us, because next we're going to talk about what's number 3, Cheryl.
Number 3 is your deal pipeline value and funding status. So really, you want to look at your whole pipeline and see what's in there right now and what stage each deal is in your pipeline. Are they real deals, or are they just sort of things that you kind of looked at and thought maybe they could one day become a deal, right? So what phase is each deal in? What needs to happen in order to get that deal done? What are the next steps that you have to do in order to move it forward? What risks are there included in the deal? What is the estimated value of that? And, sometimes I see people managing their pipeline and they put probabilities in there. So if the deal is worth $1 million and it's 50% probable, it's got $500,000 in your pipeline. That doesn't really help you if that deal completely goes away, right? So your pipeline isn't really $500,000. So really just focus on what is the total value if you can get that deal off over the finish line, and what capital you need to secure for that deal versus what is still needed. So what do you have to go out and raise or get a loan for? One red flag as you're going through this part is if all of your mental energy is tied into the deals that really don't have much behind them yet. Like, you haven't locked the deal down. You're still in that analysis or very early stage. If you're putting all your mental energy into those deals, then your activity list is going to sort of fade out. You're not going to have much to do if all the deals are still really in that very early stage. Your goal is a really funded and focused pipeline, right? Making sure that you have deals in your pipeline that are aligned with what you want to do, that have the ability to be funded or actually are already funded, not a whole bunch of made up fantasy deals.
I love that. And I do have probability in my spreadsheet, of course. And what I like to do on my deal pipeline funding is I have one spreadsheet that is just the confirmed sign, signed, sealed, delivered. One spreadsheet that is the pipeline, right? It's that funnel and you look at the probability, you look at when it's going to hit. I actually have months outlined in there to say, okay, if this hits here, this will be this projected revenue. And it sums up to a main page page that talks about, here's our defined pipeline, here's our expenses. If nothing else closes, this is where we're at. And I think that gives me that insight, as you were saying, Cheryl, to look into that 13 week and kind of say, how are we driving the ship? Do we need to really lean some mental energy into getting some of the funnel projects through a little bit faster? Are we okay? It really can focus that mental energy as well and give you, instead of having that paralysis by analysis of what do I do next, look to your math, look to your numbers to help guide your focus, and that focus will expand into that pipeline. Love it.
And I think it's the point that you made about tying it back into your cash flow is so important, because that really is how all of these metrics tie together, right?
Yeah.
One thing I just want to clarify, I'm not saying that you shouldn't have probability in there. I'm just saying if you rely on probability times deal value to, take action off of what that pipeline value would be, then you could be in a world of hurt if something falls out.
Yeah. And I think for that exact point you wanted to clarify. And as you're looking at those numbers, that's why I had to separate out into a separate spreadsheet, because I want to look at my numbers as what's real right now. Right. Where are we going? Where's the ship going to go off a little bit? And then I look at that projected side, because it does have that percentage. And then I look at when could this revenue hit to help me guide that. And then it motivates me. Okay, if I just get this one project across the finish line, I can breathe. Right. And I love that enhancement, because that also may be a way that you need to tweak the way some of these reports are set up as you're looking at them every week. And that's part of the rep. That's part of sitting in this Friday financial flashlight process, is to tweak the reports to how your brain works. Not everybody's brain works looking at numbers the same way. I had to know my confirmed revenue, my committed to cost. This is where the company's headed right now. And then I have another line that brings in some of that projected revenue at a weighted scale. And I'm happy to share that if you guys would like to see that, put it in the comments, we can add it. But make sure that your reports are fitting to your brain and to how your business works. I think that's great perspective, because as Cheryl said, you're not looking at each one of these 5 reports and we're going through them one by one by one, but you'll also see at the end, they all kind of play and go back and forth with each other and give you data to run your company as a whole. So looking at and taking it from there, what's number 4 we should be looking at?
Yeah, so number 4 is going to be your personal runway. Right. So this is for both, the business itself and your personal life. How long can you go without a developer fee or a payday? So, in the startup world, this is called Runway. How many months until your cash runs out? What are your monthly personal and business overhead? Right. And in the startup world, again, this is called burn rate. So what are you burning through on a monthly basis? And you really want to understand both your personal and your business, pull that together so that you can have that holistic picture. A red flag in this is that you've got sort of one deal out there that you're really banking on to, support your life and your business for the next period of time, right? And if that deal falls through, then you're out of luck and you're scrambling. So you need to have kind of multiple sources of income, if you will. And your goal is, 6 months of liquidity that is clearly mapped out, income sources, expenses, all of that, so that you can breathe a little bit more clearly and not be so focused on that one deal that has to close.
And I love this for you guys, because that personal runway, as we tie life into business, especially if you are a real estate developer or if you're a business owner, it's all personal. Right? It's all connected. I always tell people, you haven't owned a business if you haven't taken a paycheck and given everybody else one. And that's what really Cheryl wants you to lean into in that runway money, is when times are tough or the project may be a little bit further out from closing, how does that look for you personally and for business wise? And think about building up that goal of that 6+ months liquidity. Just start small. Can you put 10% of your, revenue this month away and just start to build it up? And so you start to have that safety net so you can sleep at night. And then really wrapping it up with our fifth one is, what's number 5?
Number 5 is our net worth impact by project. So this is one that a lot of people don't really think about or don't often think about. And this is another one where you can take sort of one deal or one project each week and cycle through them over the course of a month or 6 weeks. So it's really, what is your cash on cash return or your total profit share per project? And how is that manifesting itself in your net worth? Are the deals that you previously evaluated and are sort of in the middle of, are they still providing the bang for your buck that you thought you were going to get in your original underwriting? Or do you need to reevaluate and take a different action on those deals in order to preserve that net worth impact? Red flags in this one would be, that you're kind of stuck in this time for money loop where you're never actually building your net worth. You're just getting paid for the time that you're spending here. And your goal is really that your projects should contribute to your long-term wealth. So yes, it's great to have cash in the short term, but that's not really what we're talking about when we're talking about real estate investing and real estate developing. It's really building that long-term wealth for you.
I love that. And that's where in the Real Estate Development Academy, we start with that personal financial statement and creating that and looking back at it. And that might not be something you update every week. I mean, every quarter or especially at the end of the year. But as Cheryl said, each project should contribute to our long-term wealth. I love that because it's not just the short game. The short game matters. And that's what we're looking at, those 4 reports above and bringing it all together. And so after you go through each one of these 5 reports, what are some final reflections and questions that you should be asking yourself in your business and in that closing, and really taking a second to sit and say, what are 1 to 3 things that I can focus on next week? So when I look at these numbers, the needle moves, and whatever that needle that needs to move in that direction. Cheryl, do you have any final thoughts on wrapping up?
Yeah, I think it's really, there's not sort of one defined action that you should take from this, but a lot of it is just understanding the information and keeping on top of the information so that when you do see that there's an action you have to take, you can be thoughtful about planning what that action is and that you're not reacting and in emergency firefighting mode all the time. And so that, I think, is really what this is all about. It's having that room to breathe, having that room to understand the data and reflect on it, so that you can move forward with intention.
I love that. I love that. What I think right when you said that is a lot of the clients I have that have a bookkeeper or a CFO, and they say, yeah, we meet every week and you go over the reports and I don't understand what I'm looking at. And so I hope that this has helped you think about those reports. And really the thing is to start looking at the reports, start doing the reps. So really want you to take a breath because that's it. You just did a rep. All right. So most developers don't do this. They avoid it. They hope the numbers will work. They outsource it. As I just mentioned, there's a lot of people who have their financial team give them reports. They don't really look at it and understand it. We want you to understand your numbers. You're doing the work. And this is one simple ritual. It changes everything because clarity makes you powerful, because accountability builds wealth, because this right here, showing up, knowing your numbers and adjusting with intention is how you start leading like a real CEO. So let me tell you something. I didn't always track these numbers. I used to really rely on gut, on momentum and reacting. And it worked until it didn't. Until the day a busted timeline nearly took down my whole entire project because I didn't look at the cash flow in time. That's when I made the shift. I'm not just a developer. I'm the CFO of my business and my future. So here's your invitation. Come back to this every Friday. Start building a new rhythm. Track what matters. Shift what's off and start owning this role to a new level. And if you ever need help, real support, not just surface advice, we got you. You can find Cheryl and me in the links below. We teach this, we coach this, we live this. You're doing the work, you're showing up, and that means you're already winning. We'll see you next Friday. Hey friend, before you go, I want to say this. If real estate development has been on your heart or on your mind, we've built lanes to help you walk it out wherever you're starting from. Just exploring? Start out with our free live masterclass. Ready to do the reps and build the strategy? Join the Developer 101 Bootcamp. Already active and need to level up? Step into the Real Estate Development Academy. You don't have to figure this out alone. We can teach you, we guide you, and we walk with you. So head over to katiekim.com and book a call with our team today, and let's figure out the best first or next step for you. You're not behind, you're not too late, and you're definitely not too early. You're right on time. Let's go. The information in this podcast is for educational and informational purposes only. It is not legal advice. It's not financial advice. It's not investment advice. Real estate development, like any investment, carries risk. Before you make decisions, you should always consult a licensed professional, your attorney, your CPA, or your financial advisor, to name a few, to make sure you're making the right choice for your situation. I'm here to share insights and strategy, but you're responsible for your own decisions, and each situation is unique. So make sure you contact your professional team to give you your specific guidance for your specific case, as each real estate development's different and unique and has its own challenges and opportunities.